Hi, Assalamualaikum. My name is Nurkarunnisa binti Razali. My group members are Nur Ali Afika, Nur Syuhada Alisa, and Muhammad Rizky Dini. Today, we will be presenting our business project, which is Loaded Fries. I would like to start by introducing our project. So, our loaded fries consists of crispy French fries topped with beef sauce, cheese sauce, mayonnaise, and chili sauce. This product is suitable to be sold at food trucks, food festival, and university carnivals because it is easy to prepare and popular among customers. The product is also affordable, tasty, and suitable for customers of different age groups. Next, I will explain our competitors analysis. We compare our product with several competitors in the market, Potato Corner, McDonald's, and local food truck. Okay, Potato Corner sell flavor fries with price ranging from 8 to 12 ringgit. McDonald's sells French fries at price between 6 until 9 ringgit. Meanwhile, local food truck sells loaded fries at around 8 to 10 ringgit. Based on this comparison, our loaded fries is competitively priced and offers additional toppings such as beef sauce, cheese sauce, mayonnaise, and chili sauce. Customer can enjoy a more satisfying product at a reasonable price. Now I will Now I will explain the advantage of our product. First, our loaded fries offers a combination of crispy fries and savory beef sauce, making it a delicious and satisfying snack. Second, the product is sold at an affordable price, making it suitable for customers from different age groups. Third, the attractive presentation and rich flavors can attract more customers and increase market acceptance. Lastly, this product is convenient, trendy, and suitable for various events such as food festival and also university carnivals. Next is market acceptance and sales target. We expect our loaded fries to receive positive market acceptance because many customers prefer snacks that are affordable, convenient, and also satisfying. The combination of crispy fries, beef topping, and also cheese sauce makes the product attractive and appealing to customers. Um, and also, the product is suitable for students, young adults, office workers, and also families. Based on our estimation, the monthly sales target is around 400 units per month. We selected this target because the product is affordable, attractive, suitable and also suitable for many customers. Because we believe that achieving 400 units per month is realistic and also achievable. That's all for my part. Now I would like to pass the presentation to my group for the next session.
Okay, so hi, my name is Nadia Fika binti Muhammad Syam, and I'm going to present about the direct materials and indirect materials of our ingredient. So we already clarified our ingredients into two categories, which is direct materials and also indirect materials. Direct materials is basically the main ingredient that we use for our product, which is the loaded fries. As you can see, the direct materials, which is French fries and also minced beef ramly. While the indirect materials is basically the support ingredients that we use to make our product even more attractive. These include Kimball cheesy sauce, Kimball spicy chili sauce pasta, pizza topping shredded, Dutch lady milk, butter, cheese slice, cornstarch, chili sauce, mayonnaise, lettuce, curry powder, and also sugar. Next. Okay, while on this slide, I'm going to present about the costing information. Costing information is basically a cost of all of our materials or ingredients that we use for our loaded fries. As you can see here, the total for our direct materials is 27 ringgit 80 sen, while for the indirect materials, the total is 84 ringgit 40 cents. So the total cost for both material is 112 ringgit 3 sen. So the quantity that we estimate that we can produce by all of these ingredients is around 60 units. Therefore, the cost per unit is around RM1.87. This information is really important so that we can find a suitable selling price for our loaded fries and also ensure our profit. Next. So in these slides, I'm going to be present about our workers and also their wages. So for the direct worker, which is the food truck crew member, which is the one that are involved in the preparing and also serving our loaded fries, their wages is around 2,400 ringgit for 400 units. As you can see, they are being paid by how many production that they made, how many loaded fries that they can make. So for the direct labor cost per unit, which is 6 ringgit, that we can get by dividing 2,400 ringgit and 400 units. So that's all from me. I'm going to pass it to my next teammate.
So hi, my name is Muhammad Iskidini. Moving on to my part, I am going to break down our overhead costs and show how we calculate our OHR. To keep it simple, overheads are just basic background costs that we have to pay to keep our business running. So it doesn't matter if we sell 1 box of fries or 100 box, we still have to pay these bills. If you look at the table on this slide, we split these costs into 3 simple groups. First, kitchen equipment. So kitchen equipment, this covers things like renting our kitchen gear, gas, utilities, and fixing equipment. This costs us exactly RM500 a month. Second is food truck operations. This is our actual food truck rental, our fuel, and our business permit fees. And this adds up to RM1,550 ringgit a month. Third, indirect materials. These are things like our packaging boxes, sauces, and toppings based on our target making of 400 units. This costs us 560 ringgit 0.93 cents a month. When we add all 3 together, our total monthly overhead comes out to 2,610.93 cents. If we multiply that by 12 months, our total overhead for the whole year is exactly 31,331 ringgit and 16 cents. Now, to see how much overhead goes into each box of rice, we calculate our overhead absorption rate or OHA. We take our yearly overhead of RM 31,331 ringgit 16 cents and divide it by our yearly target of 4,800 units, which gives us exactly RM 6.53 cents per unit. To put it simply, every time a customer buys a box of fries, RM 6 ringgit and 53 cents of that money immediately goes toward covering things like our truck, rental, and utilities before we even make a single cent of profit. Next, now that we have all of our numbers ready, we can combine them to find the absolute total cost to make just 1 single box of loaded fries. If you look at our final unit cost on the table in this slide, the cost is made up of 3 layers. Direct materials. This is our raw food ingredients like the fries and the minced beef. It costs RM 46 cents per portion. And second is direct labor. This is the wage we pay our kitchen staff to prepare and cook the food. It is set to RM 6 ringgit per unit. And then the third one is overhead costs. This is the operational cost per unit that we just calculated from our OHR, which is 6 ringgit and 53 cents. When you add these 3 numbers together, the final total cost to make 1 box of fries comes out to exactly RM 12 ringgit 99 cents. This RM 12 ringgit 99 cents is the most important number for our project because it tells us our absolute limit. We know we cannot sell our fries below this price or we will lose money. And it gives us the next estimate, the exact baseline they need to choose our final selling price and calculate our profit. So that is all from my part. I'm going to pass to Alisa to continue the presentation.
Assalamualaikum and hello. My name is Alisa and I will explain about profit markup, budgeted cost statement and task 2. First of all, profit markup means the extra profit we add on top of the production cost. In simple words, it's the extra amount we add so that the business can make profit. So the basic formula is selling price equal total production cost plus profit markup. So for our assignment, the production cost for one unit offloaded price is RM12.99. If we add a 15% markup, the selling price will be RM12.99 multiplied with 115% and we will get RM14.94. So the profit per unit is basically RM1.95. We pick 15% for our markup percentage because we wanted to balance the production cost, profit and market pricing. This shows that markup directly affects affordability and competitiveness. To summarize, it's a simple but powerful tool. So next, so for the budgeted cost statement, to begin with, the direct materials required for production amounted to RM27.89. This is the basic ingredient cost that forms the foundation of our product. Next, we have direct labor. Our food truck crew members prepared about 400 units with labor cost of RM6 per unit, and totaling RM2,000 ringgit 400. This highlights the importance of manpower in delivering quality products. Beyond direct costs, we must also consider overheads. This includes indirect materials, salaries, rental, utilities, permit and license fees. Altogether, overhead costs reach RM 3,910 ringgit 93 cent, bringing the total production cost to RM 6,338 ringgit 82 cent. In addition, administrative overheads and selling expenses such as general overhead, distribution and sales assistant salaries added about RM 1,800 ringgit. This raised the total cost to RM 8,138 ringgit 82 cent. Finally, with a profit of RM 5,196 ringgit, the quoted price was RM 13,334 ringgit 93 cent. Breaking it down, the cost to produce is RM 12 ringgit 99 cent, profit per unit is 1 ringgit 95 cent, and selling price per unit is RM 14 ringgit 94 cent. This statement shows we carefully balances direct cost, overhead and profit margin to ensure sustainability and competitiveness, also affordability. It's crucial for effective business making. Next. So for this order, our business is supporting ABC Corporate Events Sdn Bhd, a total of RM 40,940 ringgit for 1,000 loaded fries, which works out to 14 ringgit 94 cent each. The cost to make them is RM 12 ringgit 99 cent per unit. So the overall cost comes to 12,990 ringgit. That leave a nice profit of 1 ringgit 95 cent per unit, or 1,950 in total. Basically, the price covers all the expenses and still give the seller a fair margin, making it a win-win deal. So that's all from me. I will pass to my next teammate, Lisa. Thank you.
Alright, so this is our appendix section. It contains supporting documents such as receipts for ingredients purchased and also product photos we use in this project assignment. So that's all from us. Thank you.